Welcome, and here we're looking at the S&P 500 on the 4-hour chart, and it's topped out on the 18 as we expected it to, which is also the full moon as well, and it's kind of typical, that kind of behaviour as well, like that sort of strong bullish activity into a full moon or new moon. But anyway, it's just psychology. Right, wave 4 here, the 38.2 retracement level comes in around the 1785, but also check the cash market as well. And the other important aspect here is that wave 4 can't move into the price territory of wave 1. So this particular high here, which is roughly the 1772 there. So if this market comes down and breaches this situation here, then we have a larger top in play and we would need to reassess the wave count. But as it stands, we're looking for a three-wave price action back into this area through here, and then a 5-wave structure to the upside through this area through here, but pretty much staying within group 1 here, and group 1 would be 10, 20 and 30, and then we'll be looking at a larger correction at that point there as well. So just drilling into this here, we can currently see that we've got a 3-wave price action happening through here, and if we drill into that further, I thought I had it there somewhere. Obviously I don't, but maybe I have it on the Dow here. On the US 30 is the same as well. So with the US 30 here, I'll try and drill into that in a minute actually, I'll just see what I can find. But once again here we're looking at a 3-wave price action. The 38.2 retracement level comes from wave 2 to wave 3 there, so that will come in at 1588, normally rounded off to the closest largest number, which 5 is the second strongest number in the market, so that's what you'd be looking for there. Also as well is that when you're looking at a trend line through here, and especially with wave 4 typically breaks the trend line here. It's a typical thing, so always expect it, and that should unfold from that point there. And just seeing if we've got, just bear with me for a second, see if we can find a bit. Here we go. Yeah, I was looking at this morning. So in this wave 4 here, we're looking for a structure that would be the normal A, B and C structure is what we call a 5-3-5 structure, and the 5-3-5 comes in as 1, 2, 3, 4 and 5 for the first wave, which is an impulse. And if we do get 5 waves here, then we're going to get another 5 over here after we get a retracement through here, and the retracement is normally in 3 waves, and the textbook is pulling back to the 61.8%, which is anywhere there's close enough. But normally when you're looking at retracement levels, it's good to have a look at the blocks of supply, which are the sellers here. So there'll be one here and the other one would start here in here. So that's what sort of normally happens. If it gets past this one, it will go to that one. In this little section here, because we're looking for 5-3-5, we're still looking here in terms of, if we just zoom into here a little bit. Yeah, right. So we've got 1, 2, probably 3 and 4 into here, and 5 into this area here, and we're looking for was it 1785? I can't recall, but anyway, something there. So we're looking towards the end of this now, and what we want to see to the upside in terms of trading and analysis, they're two totally different topics, but that little wave here that will also be in 5 waves. So that's what you really need to find in here as well. You need to find 5 waves there. If you get 5 waves there, then you'll get another 5 waves over here once you've got an ABC correction, and that's where you want to start building in at that point there. Okay, so moving on to the European markets here, the FTSE, which is acting the same as the Australian market as well, so those two are sort of in sync a little bit. The situation here is this is just on the 15-minute chart here, but the 6700 and that's the balance line. The group 1 above that, the 10, 20 and 30, 1, 2 and 3. If support is found on top of 3, well then you can look for further upside there, and finding support on 3 separates traders thinking from the closest largest number. At that point it separates and it starts to think at 50, the 5, which is the second strongest number. So support on top of group 1, it's free to go and it's forgotten about this, but while it's still trapped in here, that's the case. So group 1 is the resistance. Group 2 here, the 65, 72 and the 80 is holding the market to the 6700 here. We can also see from this point here, we can see 5 waves down through here if you feel like counting the 1, the 2, the 3, the 4 and the 5 here, and then the A, the B and the C here. So once again, we're in the same boat here. We should come down a little bit further through here before we see any upside come into play there. Okay, with the Australian market, we've got more of a bearish picture unfolding because just on the 30-minute chart here and on the 5300 here, the move that we tracked up through here, we knew that we had 5 waves here, so that we knew that we'd get another 5 waves up through here. I think this is the 5th wave through to here. If not, well then it would be in here, but I think this is particularly the right way to go. It's just a truncated 5th wave that never made a new high here, but still has the structure within here. However, the main point here is that the move from 5300 here to 5400 here is in 3 waves. So that means that we should be making new lows below the 5300 here. So yeah, we can see that it is developing 5 wave structures to the downside. That yes, there will be support at the 5300 here. The futures market, or the ASX CFD here, is trading lower than the cash market, so we can expect that to go down. The FTSE is, sort of lower as well, and we've got the US markets being lower as well. But just on the bigger picture for the ASX 200 here, it does appear that that we've got an impulse wave up through here, and if we've got an impulse wave up through here and we're getting this correction through here, then that move from 5300 to 5400 here in 3 ways, we should make a new low below here. And if that's the case, then we have to look at this whole situation here as an A wave, a B wave and a C wave down through here, and the C wave down through here would be in 5 waves coming down through here to the 61.8 retracement level, which would leave it at 52.50, as this market likes to move in lots of 50 points all the time. So yeah, there's a larger bearish picture here unfolding. Yesterday we've seen this move down through here on higher volume as well. Bearish there. We see those moves moving up through here on lower volume going up, and that's divergence that you would see in the indicators. So lower volume to the upside and increasing volume to the downside. So we just need to be mindful of that. If that 53 is breached, we need to look at the 52.50 there as well. All right, let's have a look at commodities, as they're actually expected to have a small rally. Okay, starting with gold through here, and we're still looking for the particular rally as such, when it's halfway through. So we've got our 5 wave structure to the downside here. So now we're looking at our counter trend, our A wave, our B wave and our C wave back into this area here, or maybe not that high, but certainly that would be the resistance area in through here. So just drilling into this little section in here as such. Right, so we've been tracking this B wave down. So just coming back to here, this little B wave here could be complete now. So we'd been looking down for wave 1, back for wave 2, down for wave 3, cross for wave 4, nice triangle pattern through here, a 5 wave structure, but corrective, wave 5 to the downside. So we may be seeing the first instance of wave C moving to the upside here. So this first little leg in here beginning through here. So there's still more to go yet. If the market falls, below the 272 there, then then we're going to have another low, and I've obviously miscounted somewhere. But as it stands, we should see this market move up from this point through here, and that would be the same for silver as well. We've been looking for a bounce for silver off here, but what off the $20 here basically. But we'd also been counting the little 5-wave structure down through to here, and that seems to be in place now as well, just on the 1-hour chart here. The whole 5-wave structure down through to here, and then we'll just count in the last little 5 waves down through to here. So we could pretty much sort of peg this low in through here, but a move above the second strongest number here, 5, and also the midpoint here, the 50, the 2050, would sort of help confirm that price action. There's certainly going to be resistance in group 2 here, 65, 72 and 80 as always, but let's see if we get that lift off here. This move up through here, like gold, we're expecting it in 3 waves and a 5-3-5 structure, and once it's completed we'll be looking for a longer term short there. The base metals, looking at copper here, once again we also think there's a rally in here as well. There's a couple of ways this is the daily chart here, and there's a couple of ways to count all of this, and one of them that we're keeping in mind is a larger ABC pattern, which is simply the A wave to here, the B wave in 3 waves to here, and then a C wave up through to here. Now that's a possibility that we're looking at through there, but while the market is under the resistance level here, and it hasn't retested it yet, and that's what it'll be doing now, the 320 or the 318, because what we've got here is a little bit like gold really. We've got this 1, 2, 3, 4, 5 down through here. So we're looking for some sort of ABC pattern, which obviously can come back up into the supply area through here. So that's one way of looking at it. The other way I've just mentioned is the C wave coming up here, and that would be in 5 waves coming up through here. So obviously that's really going to be good for the materials sector, and also currency dollars as well, like the CAD and the Aussie there as well. So just drilling into that on a finer point here, we've been looking on this move coming down through here in 5 waves, and that really starts from here with 5 waves down for wave 1, back for wave 2, down for wave 3, and we're looking for wave 4 here, and down for wave 5. Now I know wave 5 is a little bit short because normally when the extension's in wave 3, it means that wave 1 here and wave 5 will be roughly the same thing here. So that's also a possibility as well, but once it takes out this particular high going through this level here, then that confirms that it's on its way. So I'm jumping the gun a little bit. Can I drill in here further? Let me just have a look in here on the 5-minute chart here, see what we've got here. It's still not confirmed. I can see that we've got this little wave 1 here and wave 2 here. This is all part of the 3rd wave here that I don't think's finished just yet, 4th and 5th here. So we're still not, this structure that we've got here is not in 5 waves yet. I would expect it to, as I'm seeing this is a corrective channel here, and we'll break to the upside here. The 315 here is the midpoint here. It was resistance, first high above the level, and now it's looking forward as support. So yeah, it's looking good, but I don't have the evidence to call this impulse wave in, because if we do get a 5-wave structure here coming from a different direction from coming down, if we get 5 waves in the opposite direction, well then we'll get 5 waves here, 3 waves here, and then another 5 waves up here. That much we can be assured of, and that's what we're looking for essentially in our first stages. We're looking for a retest back to 318 to 320 there, which is 20 is the pivot within group 1, 10, 20 and 30. Right, the oil markets here as well. We're still looking, it's the pattern that's sitting on 93 is corrective, because it's got overlapping wave structures through here, so we do expect it to move further down, but the rally that we're looking for may not be complete just yet, so we may get something, you know, like this still to go through here as such. So, but no, there's no trade there as such, but they're still bearish to the downside, and gas is a bit the same as well. Just looking at gas here on the daily chart here, you know, this is a wave 4 here, and right over here is a wave 3, and this whole wave 3 that's come down, it's long and strong, as you can see. So we're kind of getting towards the end of it. The 4th wave has been sideways and complicated through here, and the wave 5, the 1, 2, 3, 4, and there's still more to go down here as well. Here, the 1, 2, 3, 4, 5. There's still more to move down through here. We can see that the medium level here, $4, is has been retested as the resistance, and it's just been working lower, and it'll continue to work lower towards the $3 mark there. Okay, getting onto grains. The soybean market here. Well, you know, as you know, look, I'm just. Anything could possibly happen, of course, but if this 1300 here becomes the support, then we're looking for long trades from that point there. It's under this level here, so we're not going to go long. We'd only go long if it had support there. And if it does find support there, then our wave count of this being up for wave 1, an ABC coming back for wave 2, and then that 3rd wave coming up through here, taking these highs out to the 1500 up here, would still be on the cards. But you know, if it's not going to give us a setup and a signal, well then obviously that we're wrong, and any breach to the downside below the midpoint here, the 1250, obviously creates further downside, and would be looking to build short trades in from that point there. But as it stands, that first leg up here does appear to be in 5 waves, so I'm still looking and trying to work out some type of corrective pattern that can happen here, and it can come in sort of many forms. We can get 5 waves to here, we can get 3 waves back up to here, and then another 5 down to here as a larger A, B and C here, and then up from that point there. So that's one possibility there. If this group 2 area here just finds resistance, then it's going to be coming further down through here. So it really does need, well, technically it needs to stay above this low here, but yeah, let's just give it time to play out. We can see that the other grains are reasonably weak, but they're starting to fight back. Wheat is retesting the medium level 650 again here. And we can see this sort of price action, it's a bit dodgy to read, but it's basically like a ball bouncing. It's slowing down, and as I said before, if we can find, you know, a nice support on this closest largest number, this 650, a medium level, then we'll be looking to go long from there. But once again, we'd still want to see an impulse wave to the upside, and we've kind of got that really starting to develop as such. So we'd need to see something like that, then we wait for the ABC pattern like that, and then we can start building a trade, you know, through these levels, group 1 through here, and so on. But we'll get there, and that will unfold sort of shortly. We'll need to keep the US dollar in mind for that as well. It's still pulling back and should pull back to 80.50. But once it does that, and if it starts to push up and gets above 81, it's going to place pressure on the commodities. The corn market as well. Yesterday we were looking at this moving lower as well, but we understood that the 410 here, I think that's an old no, the 410 here, 1 being the strongest number in the market, always has orders sitting there. So, you know, we're in group 1, so 10, 20 and 30. It always bounces around, you know, into group 1. It bounces around a lot. So, but we still expect this move to unfold lower and move down through here. If it finds support on 420, then obviously it's going to be pushing up from that point there, but it's just retesting supply in this block through here, so that should roll over through there. Alrighty, well, let's have a look at FX. Okay, the US dollar, this is just on a daily chart here, just to sort of map out the picture a little bit. But look, basically we've been looking at 5 waves moving up through here towards the 81. We're looking at some type of corrective pattern here at the moment. You know, this circle here is the top is the 50 and the bottom is the 61.8 retracement level. So this market can come back to that level and retest that mark there before pushing up further. However, the halfway between these two, the 80-50 is the support area through here. So, you know, that could certainly sort of hold it. But what I was looking at here, as you know, we've got wave 1 up here, or a wave, and we've been looking at this corrective wave move back. But this in here does appear to be corrective here. If it drops out of group 2, out of the 80-65 here, then expect it down through to here. But it is in its later stages through here. Just sort of drilling in here a little bit. I just want to have a closer look in here as such. I can see from these lows here that we are getting impulse waves to the upside. So we're getting 5 up and 3 back here as such, and then a larger 3 here. So, and then we're also getting 5 up here as well. You can see the 1, the 2, the 3, the 4, and the 5 to here. So we are getting impulse waves to the upside here, and this is in 3 waves here. So we may be getting another little impulse wave here. So it can push up from here, but if it drops out of the 80-65, expect it down through to here. Support on top of the 880 here would probably trigger some weakness in the euro at that stage. But in the bigger picture, we want it to get above the 81 here. That would be the confirmation that this market here is moving to the upside, taking these highs out here simply by finding support on here, and this would also be the short for the euro at that stage there as well. So this here does appear to be corrective because it's got overlapping wave structures, so it can certainly come lower through here, so we need to be a bit mindful of that. We'd only look to go long above the 81 and looking to short the euro if this moves up above the 81. So the euro is moving to the upside, and we're still going to stay with our rally here as a wave 2 rally here. Just drilling into that, this is the 50% retracement level. This is a 61.8 retracement level here. We know that this is the supply level over through here. We also know, drilling in as well, if we find support on top of group 1, which is 135.30, then we can push up to the 50 from that point there. This is moving up through there. The swings are diminishing. It is getting a bit smaller through there. There's different ways to count this little trend up here, but we're looking at it as an A wave and a B wave here and a C wave moving up through here. So you can count this in a corrective manner as well, but I'll just stay with the 5 wave structures that I can sort of see here. And the way that I've been doing this is 1, 2, 3, 4, 5 for wave 1, and then wave 3 is unfolding through here, which would be in 5 waves of bracket 1, bracket 2 here, and bracket 3 here. So wave 3 of brackets finishing here, then wave 4, then wave 5 to finish wave 3 here, wave 4 and wave 5. So this is a real possibility, and this is obviously see the US dollar move lower. If I'm wrong here, then that 135 would need to become the retested resistance, and we can start looking for moves above there. But this move across here is corrective, so we'll see new highs above here, which we've already seen. I'm just wondering if I've got anything lower in here. Right, so look, it's a little bit like the Australian dollar at 94 there. If support is found on top of group 1, and group 1 is the 135.30 here, then you'll know you'll be pushing higher through to here, and support at the midpoint here 50. There'll be some type of correction across here, but if support is found, then you can look into group 2, the 135.72 sort of area there. But you know, this is above number 5 here, 135, so it's got strength, it's got support, and the trend for this is we're seeing impulse waves to the upside, and we're seeing corrective waves to the downside. So this market is continuing to move up, and as you know, you wouldn't short it above the 135. You need to be long. You need to be on the right side of the closest largest number at all times. Okay, the Australian market, just working with this intraday as well here, the 94 here. Once again, like the euro, we're seeing impulse waves moving to the upside, and as you know, we have been counting the 1, the 2, the 3, the 4, and this is the 5th wave as I see it here. But we've got 1, 2, 3. This is corrective here. It's 4, and yes, look, it may come into the 4 here, but the same story. If it finds support on top of the 30, the number 3, the top of group 1, then you're going to be going to the 50 and taking this new high out here, because the extensions in wave 3 here, the wave 1 and wave 5 will be roughly the same length here. So if it does find, you may get in early on the 94.20 if that becomes the retested support, but trading above it is not support. Coming back and checking it is support. So the retest is more important than the breakout, but they're both part of the process for moving higher. And so you could move in on the 20 if you wanted to, and add on to the 30 and exit at the 50 here, and then wait to see if you get support again. But after 5 waves, as you know, so once you've got 1, 2, 3, 4 and 5 here, then you know you're going to get a larger ABC before you see any further upside there, if that's going to be the case. So trade to the next largest number and exit from that point there. Alrighty, well, that's about it. But tonight in the US, the swing days are normally on the Wednesdays and Thursdays, and part of that reasoning is that most of the financial announcements come out through those days there. So in the US tonight, while starting in the UK, we've got you got bank rates coming out, but the US is the important one. You've got CPI figures, you've got retail figures. You've also got meeting from the Feds coming out as well. That's not coming out till 6 a.m. that one in Australian time. So and these all need to be read in different ways now as well. Because of the bond buying thing. So positive news on CPI and retail figures may not be such a good thing, but if they were bad figures, we'd probably see the market go up. So it's a bit of a topsy-turvy situation at the moment. So just be mindful of that. Alrighty, cheers.